Hello everyone, this is Popeye and today we are sailing together to the Old Wild West for the good, the bad and the ugly YouTube series. A video collection where I will evaluate some of the past trade that I took in the previous days in order to check the why, the what and the how behind this trade, in order to pick one good trade, one bad trade and one ugly trade. We will evaluate together this trade to see how I can improve on my trading journey, but also I will try to give you some tips in order to grow in your path to become a profitable trader. So stay with me here in the Wild West for the good, the bad and the ugly YouTube series. As always, big shout out to Bluefin for sponsoring my YouTube channel. Make sure to trade with me on Bluefin. You will find the referral link on the description below. And before moving to the good, the bad and the ugly, also make sure to subscribe to the YouTube channel, and at the end of the video, if you enjoyed, make sure to leave a comment and a like. But without further ado, let's go to see the good, the bad and the ugly. So the good trade for this week is a Bitcoin long, and once again also this week the good trade is basically one of my signature trade setup, the range deviation. So this trade was shared last week on the market weather bulletin and also explained on Telegram, and that I was looking to take this trade based on a simple range concept. So Bitcoin was trading on high time frame. We can see here in a bigger range, more or less this big range we had here, but also it became, as I was explaining in the market weather bulletin, also this was becoming a pretty actionable range, and the expectation for this range was this little range, we are at mid-range of this bigger range, so we are more or less trading in the middle of this big range. So in this place I could expect some choppy price action. So choppy price action means up and down very quickly. So I said perhaps it could be worth to exploit for a scalp, for a quick trade, this little range where we have been trading, I think, during the weekend, from Wednesday until the weekend. Then Monday was my first trading day of the week, and I started to develop this interest because, as you can see, on the good trade of this week, we had the establishment of this range. There was a deviation on the top of the range. The range was again visited on the other direction, as usually it happened. After this range was deviated, low time frame price action switched to bullish, so it moved up. More or less, it started to develop the interest when the price was up here and was coming down, and I saw the confluence, as usually, of the Fibonacci golden pocket, demand here, and the range low, that is this first swing low of the range. I think it was the same also. Yes, you can see value area low of this range was also confluent with this entry. So in the market weather bulletin, I explained this reasoning, and they say, look, I would like to trade this range to exploit it quickly. This is also a good trade because I secured with some partial and with the total around 2.8. It's also a good trade because I decided to close it, as I wrote in this post. Fair enough, trade is done for me. I closed it here. It was not reaching, I think my final TP was 90k 570. I think it never reached 90,570, as you can see. If I would not have closed this trade, I think probably I would be front run, and the trade was not filled by very few dollars. So also the fact that I was very close, I saw price a little bit stalling, I closed it. It would not change anything for a few dollars to go higher. So once again, one of my signature trade setup range, I believe, are very reliable, especially when you see, as we saw here, deviation on the top, deviation on the bottom, reclaim, retest, and then a visit there. It's just a range, so I think here the mentality should be really focused on range, choppy price action on the context, as in a higher time frame context, as I was explaining in the beginning. So do not become a moon boy expecting that from here we go to the moon. Take your profit, enter, exit the trade, and let the market do whatever it wants. As you can see, the market went completely to the other direction. After all, I'm recording this video on Sunday, 1st of February, but you see, perfect entry, perfect exit, then didn't care at all about what the market was doing. After all, I took my money, I took my trade, I got the fuck out as soon as I could, and I was very happy with this execution. So the good trade for this week is the Bitcoin long, as always, signature trade setup, the range deviation, and the range environment. The bad trade for this week is XLP, so a little bit caveat, I didn't take many trades, so I didn't have much to choice. It was a bad trade, but to me, I mean, it's a fair trade. So I said very similarly, you can see the opposite of Bitcoin. There was this environment, this range. At the moment of taking the trade, I say, look, pretty clear range. We did have a sweep, so interest is to short and you move as close as possible to value area highs, supply, and fibs. The trade was filled, as you can see. Market was looking a bit strange, so I say, okay, this moment I was filled, price is moving strongly on my direction, stop almost at break-even, usually should stay in the range and move further down. It didn't happen, so as you can see, soon after I posted that I moved my stop loss at break-even, more or less here on this dump, price corrected completely, took me out at break-even and went completely to the other direction. So bad trade for a couple of reasons. After my review that I did today on the Sunday, on the weekly journaling day. So the problem of this trade were, let's say, two. One, I didn't take profit, but I think I'm not blaming myself too much, because usually in a range I take profit at around mid-range, as I did in the Bitcoin long. So the first TP is around mid-range, final TP on the other range extreme. But the biggest blame I do to myself was not understanding that I was trading absolutely the wrong range. So the right range was this one, as you see, more difficult to trade for sure, but the deviation, real deviation, was this, not this stupid week here. And after this deviation, in fact, price went completely ballistic on the other direction. So a bad trade, specifically because let's say I went a little bit too aggressive. I selected the range I knew I thought it was relevant because of this, but clearly the more relevant range was the biggest one. So the problem is, you see, even if this is my signature setup, similar to the one of Bitcoin, at least I was smart enough to move and protect my stop loss, but was a wrong reading of the context. The correct range was another one. The ugly trade for this week is a Zcash trade that I didn't take. So this is becoming really frustrating for me. I think it's the third week or fourth week that the ugly trade is a trade that I didn't take, and is ugly because actually then the trade play out. So I will give you a little bit of explanation, but as I said here, another clean range, so interested in explaining the range extreme as long as it lasts. For a short, either sweep that high followed by a low time frame bearish market structure break, or break down directly from here. So you can see here was creating a clear BART pattern, so could have seen a drop here, but for me the interest was this high here to be swept, and after the swept, as I wrote, go short after a low time frame bearish market structure break. That's exactly what happened. So we swept this high here, price started to stall. We did get, as you can see here, at value area high, a market structure break. As you can see, the market structure here is clearly bullish, going up, going up, going up there. Here we get our bearish market structure break. As I was saying, low time frame market structure break. Here is probably more visible. You can see this structure going up, going up. Here we get our market structure break, and we get a perfect retest. If we take the fib of this last leg down, perfect retest here in the golden pocket, and then price capitulate exactly in the other direction as I was expecting, as you can see here. So ugly trade, because during the month of January, this is not just related to this trade, but is all the ugly trade, I think, of the last three episodes, I didn't took short that I saw. because somehow I psyops myself with the fact that in the past I shorted crypto quite a lot, and I felt that these were going to break, and I was not supposed to keep shorting the crypto market over and over again, because sooner or later the market would have punished me for going too much short, and because we might see a recovery. To give you context, also in, let's say, I psychologically went, let's say, in this mood because there were some sign of high time frame support at this level and so on, so I could see this going to the other direction. There was also here, as you can see, sort of 4-hour market structure break. So I went more to force myself thinking that I was not supposed to be strongly shorting. Nothing more wrong than this. History then confirm that this setup was absolutely a solid setup, and confirm that value area high, deviation, whatever, is a place to go short and to just follow system, just follow strategy, just follow setups. Same as last week, same complaint, and I'm not learning from myself, even though I do journaling, I do reviewing, and now since this month I'm also doing YouTube recording where I keep telling myself that I have to follow my system, I have to follow, take my trigger, cut the noise and whatever. But you see, and I'm showing you the reality of what trading looks like, what brain does to us, I keep not doing it. So still close the week in profit, so it's just a missed trade, let's say, not a wrong trade, but still left a lot of profit on the table. Should you would like to take trade for me in the future with me, or to take your own trade, I suggest you to join Bluefin using the referral link down in the description below. Bluefin is a super cool exchange, non KYC, so no need to share any of your personal information to trade on the platform. You just need an email address. You click in the referral link down in the description below. You will be eligible for a lifetime discount on trading fees of 20%, but also you will be eligible to participate in all the cool campaign we run with the Bluefin team that will give you a lot of benefit, like trading bonus, to help you in your trading journey. So do not wait further, just click the referral link down in the description below and trade with me on Bluefin. So quick summary for this week. The good trade was this Bitcoin trade. Not much to say rather than good reading of the context, because we saw in the context we were in a macro mid-range. Macro mid-range implies choppy price action. Choppy price action means get in, get out as fast as possible, and expect this kind of choppiness. You see, this is mid-range, choppy, 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 choppy. We got the choppy, choppy here, but we managed to extract some wealth from this chop. How? Usual range, deviation, trade setup, trade signature, trade setup, and after the sniper entry at value area low, also sniper exit at value area high. Very cold, very straight to the point, very effective, very proud of this trade. Very similar to the last week good trade, the pump trade that went faster, but in essence, very similar to this one. So follow your system, read well the context, and go with your plan. The bad trade for this week is XLP. You would say very similar, but in this trade, the takeaway is read better the context. So as you can see, same idea, same concept, same setup, good reading of the context in Bitcoin gave us money. Here in XLP, bad reading on the context, so using the wrong, this one, range, wrong one, gave us at least a break even, but could have been a stop loss because the right range was the bigger one. So reading of the context, do not be forcing trade. In this case, I forced the trade because I didn't want to wait, let's say, the deviation here above, and the wrong reading of the context would have cost me a stop loss if I was not fast enough to move the stop loss at break-even. So also in this, remember, choppy price action also imply another takeaway, protect your stop loss as soon as possible, because you never know in the choppy price action what can happen. The takeaway for the Zcash trades is cut the noise, follow your system, take the setup that are according to your playbook, and do not psych-ops yourself with bullshit beliefs, bullish idea, bullish dream of something that is not in the chart. So respect the chart, respect your system, and simply trade. For my excuse, I was actually skiing, so I didn't want to force too many trades, but still, I think it's important to review this trade, the one we took, the one that went well, the one that goes back, and especially the one that we didn't take. So as always, I hope you enjoyed the video. I hope you find it helpful. Remembering reviewing trade journaling is probably the most important task we can do in trading. So make sure you always review the trade. And I hope this video series, the good, the bad, and the ugly, is giving you incentive and a good example to do your own. As always, make sure to subscribe to the channel, leave a comment and a like, trade with me on Bluefin using the referral link down in the description below, and we will see you in the next one. Stay safe.